Alright guys, it's that time again, market recap and a look ahead and see what's possibly in store. And if you're new to the channel, I would so appreciate it if you hit the like and subscribe. Okay, so yeah, let's get into this one. So again, record highs, everything is in green, literally right across the board, all in green. Energy did so well last week, ended up on Friday, just really 2.7%, doing extremely well. Also, off the back here, no surprise here, crude oil, Brent crude, gold, doing a fantastic turnaround. And this is all at the expense of a weak US dollar. So before we get into having a look what is driving all of this, I just want to quickly have a look and see what's happening for next week. And then we can just start putting all the picture together and see how the market is going to react for next week. Okay, so what to expect in the markets this coming week. So if we just go down here, Investopedia actually just put a really great timetable out here. So just very quickly, asset classes by year to date, total return. Bitcoin has reclaimed the top spot here. Last month that this actually oil was on top, but again, oil coming into second place. I think commodities, gold is still very risk off right now, but Bitcoin just flying, oil doing extremely well. So if we just have a look on Monday, pending home sales, this could be quite interesting. If we go down, the Case Shiller Home Price Index is going to be a very interesting indicator. It's just going to tell us how well the US economy is actually doing, but I can tell you already that the US economy is actually retracting. So we'll just carry on going down. US vehicle sales, again, this is going to speak to inflation, how well vehicles, particularly like secondhand vehicles, have been doing. So this will give a very good indicator on actual inflation, in particular the US. And then Thursday, this to me is one of the most important signals in terms of how well the economy is going to be doing. But what I have noticed is quite a trend that any type of economic bad news, it does actually push the markets up. For some reason, markets just really enjoy bad news. The last time there was some sort of a job report, employment reports, actually, majority of that was actually in government itself. There was actually a retractment from the IT sector. So retail did pretty well the last time, and government jobs really was the bulk of an increase in terms of employment. I am expecting still an abysmal report, to be honest with you. More jobless claims being added. So let's see. But ultimately, if the report is bad, guaranteed the market is going to go up. It just really loves bad news. And then, of course, the non-manufacturing PMI is also going to be quite interesting. So all of this really for next week is going to be speaking to how well the economy is doing, which will be quite a telling picture itself. So you got to understand that the stock market and the economy are completely disjointed themselves. America's true economy is actually retracting. It's just got unabated debt occurring. There's hardly really true new jobs being built, and on top of that you've got the stock market, which is completely being flooded by the printing of money. So very interesting indicators in terms of how the US economy is actually doing. But you can kind of see right now that in terms of asset classes where you should be in terms of players, certainly in crypto, Bitcoin itself, and oil and commodities, and stocks. So pretty much these four factors, and this is where we're going to start painting the picture. But please don't forget gold itself. It's currently risk off. So is government bonds, but I would not get into bonds, and I'm going to discuss that in this video as well. But you definitely want to start getting into gold itself. It's just positioning yourself, and you're positioning yourself against the debt crisis that's coming. So gold currently is risk off, and when in terms of risk off, that's really where you want to be putting your money. All right, so let's just go back here and let's see what is driving all of this. Now, we know on Friday that Jay Powell did his speech and all eyes were glued, anticipating any sort of hints on tapering, dates, talks on tapering, and anything like that. And ultimately, the short end of the stick really was no, there's no tapering for the foreseeable future itself. So there is going to be no tapering this year at all. Perhaps 2024 might be a more realistic target in terms of tapering. Remember, the economy is shattered. The US economy is broken. It needs to resuscitate, and it's going to need every single printed dollar that it can get to try and flood into the market. Well, that's the entire theory behind it. But as you can see, even the VIX, I mean, this is in red, which is a telling sign that there's greed in the market. There isn't any fear in the market. So with Jay Powell being very clear that there's no tapering, the market loved it. And it went up. And ultimately, the dollar didn't like that because the dollar came crashing down. But with the dollar going down, well, no surprise that you're seeing gold going up. And again, no surprise that you're seeing crude oil is going up. And I actually want to talk a little bit on crude oil. And it has done a remarkable little bounce from its correction that it had. But oil is going to keep going up. The stock market is going to keep going up and up and up and up. Okay, so what is the picture that's actually being played out here? What can we expect on Monday? Well, it's very simple. The 10-year yield is actually up. The DXY is weaker, and crude oil is up. So this is telling you that Monday the market is just going to go up. And I'm expecting quite a good week in terms of the stock market. Now, it could potentially just flatline here a bit because it did come with quite a good strength on the backbone of last week, close on Friday. So we could have a little bit of a cooling off period, but I'm still expecting it to go up. Particularly if there's any bad news coming out from a lot of these reports, particularly like the jobless claims and things like that. The market really does love bad news, and based on all of that, I am expecting the markets to keep going up for next week. And then again, the Middle East, apart from the shit show that's been happening in Afghanistan, and there's a reason why the US has actually pulled out, and I'll explain why they did this. You got to remember that in September now, the US is facing their debt ceiling. Congress has got to actually action this in terms of agreement to raise the debt ceiling because it's coming to its end now. So they actually have to raise the debt ceiling even higher. So that's going to be taking place in September. And this is one of the reasons why the US has started to pull out of Afghanistan, because the US, from what I could read, was spending about $750 million just to keep personnel in Afghanistan. Now that's $750 million that can also be put into the infrastructure bill. Now this Biden administration is trying to suck money from everywhere possible in order to get this economy going again. Again, we're looking at Israel strikes Hamas targets in Gaza Strip after border clashes. Now, this is going to carry on escalating. So just keep an eye on this, because all of this actually plays into oil, particularly what happens in the Middle East. And then if we go back to Afghanistan now, you've now had almost a stabilizing factor, which was the US in Afghanistan now being pulled out, and also the British troops currently being pulled out. You've now got a very rogue entity, which is the Taliban, and how they're going to destabilize the entire region itself. And this could spill over into the Middle East. And then you can't forget what's with Iran. Now, Iran's trying to be this hegemon of the Middle East itself. And then, unbeknown to a lot of people, is Saudi Arabia has signed an agreement with the Russians to do joint military exercises, right? So what is happening is this complete geopolitical shift. Now, as you well know, oil, majority of the oil that lubricates the entire world comes out of the Middle East. So all of the stuff that is happening is going to have an effect on oil. All right, and it's going to keep sending the prices going up. Don't be mistaken. The reason why the US is coming out is simply to free up that $750 million that's been spent there and try and redirect it into the US economy. And that's really it. Because you also got to remember the infrastructure bill is also coming into effect at the end of September. So effectively, what is happening from September going into the last quarter of the year is this massive injection into the US economy. So you want to keep your eye on stocks, and you want to definitely keep your eye on energy because there is a huge play in that infrastructure bill towards energy. Okay, so let's have a look from the bond. This was a very interesting article from Seeking Alpha. I'll actually put this link in the description. You need to have a read through this because it's very interesting. Pretty much the Federal Reserve tapering is likely to cause a rise in real yields and yield curve, which would be bearish for the bonds. And the reason why it would actually be bearish, which is not taken into effect, what most people are thinking about is the possibility of that the perception is that tapering may cause inflation to decline. Typically, yes, and it would boost the bond market, okay? And on top of that, strengthen the US dollar, you're limiting inflation and so forth. However, as you well know, that would have a knock-on effect on gold, knock-on effect on oil, okay? But this is not guaranteed since many inflation forces appear to be non-transitory. And these many inflationary forces is labor and commodity. Okay, so let's just have a look and end off on the cryptocurrency side. Okay, so as you can see, Congress puts forward 18 bills to try and curb this wild west of cryptocurrencies. Look, ultimately, I do support these type of regulations itself. There's just too many scams taking place, and there's got to be some control at the end of the day. So I do really support this. But if we go down, Visa invests 150,000 US dollars in NFT CryptoPunk assets. So NFTs are back again. Their popularity will actually rise. So a lot of focus, and you're actually going to see a lot of companies start getting into NFTs. And there's an article that I've got just now, so we'll leave that for a little bit now. But you can see Budweiser also joined in the action by purchasing a fan art NFT for 8 Ether. Worth roughly 25,000, and I'll show you now what that is. And we've got PayPal launches crypto services for UK customers. Fantastic. MicroStrategy splashes, this is insane amounts of money, 177 million US dollars on Bitcoin. Now holds almost 109,000 Bitcoins. I mean, this guy, Michael Saylor, will eventually be one of the, will actually be the richest man on the planet if everything goes according to plan with Bitcoin to reach that 1 trillion per Bitcoin. Insane amounts of money. And then, of course, we've got Binance denies allegations of market manipulation. Yeah, whatever. We go down. Just winners and losers. Okay, so just want to have a look on the NFT story. And this is a cool article. The culture land grab. And this is so similar to what happened in the 90s with regards to the internet boom. So if we just go down here, Visa bought CryptoPunk, Budweiser bought beer.eth. Okay, so it's just so reminiscent of the internet boom, And then YouTube gaming lead says NFTs are self-evident. Yeah, we all thought these companies would come to crypto because our stable coins are awesome, or because DeFi yield is so good, or because they needed digital gold for their balance sheets. Well, it turns out that's not the case. Turns out they are coming for our JPEGs. But this actually makes sense. NFTs are fun. They're non-threatening. They're not coming to disrupt bankers. They're not promising a reasonable expectations of profits from the efforts of others. How can a regulator get mad at a cool cat? Okay, so NFTs are going to be on the rise again. So it's really cool seeing like Budweiser getting involved here, and Visa and so forth. And this trend is set to continue. So NFTs has got quite a good space currently right now. Okay, and last but not least, Cosmos. Also a very cool little article here. Rallies after launching cross-chain bridge and wrapped Bitcoin. So pretty much Atom price booked triple-digit gains after the network built out its DeFi ecosystem and works on cross-chain bridges for ETH and BTC. Very, very smart move from Cosmos on this one. Again, I'll put the link in the description. It's a really fascinating read. And yeah, they played this one really, really well. All right, guys. So yeah, just quickly recap. The market is poised for higher gains on Monday. Just watch the reports that are going to be coming out, particularly for your home prices, particularly for vehicles, and particularly for the jobless claims itself. All of this is going to give an indication of how well or not so well the US economy is doing, and all of that's going to have a ripple effect on the prices of gold. It's going to have a ripple effect on the stock markets, have a ripple effect on oil, and will also have a ripple effect on the Dixie. So just keep your eye out on that. I am expecting not so great news. I'm expecting very good signs of inflation itself, and by and large the stock market itself loves bad news. So I'm expecting these stock markets to keep going up, and it will keep going up. Cryptos is going to keep going up. In fact, Bitcoin will break its all-time highs inevitably, and that's a very consistent view that I have. And oil is going to keep going up and up and up. All right, this is ChrisTrade. Peace.